Hey, what is up, dudes and dudettes? This is Dudes here. Long time no see. We were number 2 and I were traveling this weekend. Therefore, you guys will see the masterclass. I think it's scheduled this afternoon to post out, and hopefully, you guys do like that. And apparently, every time we travel, the market goes down. Maybe we just should stay stationary. Just joking. Anyways, if you go look at, so there's an index called Fear and Greed Index. For those of you who knows my background, I was gonna go get a behavioral finance PhD in Stanford, but apparently they only take 2 people out of 2,400 people, and the people that they took, I think not 2 people, maybe 8 people. The people they took are all math majors. I was a business major with another degree in what is it called? Another degree in anthropology. So one of my graduation thesis from college was actually talking about the greed and fear, the human factor of the market, right? So I think measuring greed and fear is very important in terms of like looking at the short-term perspective of the market and look at the medium-term perspective of the market, even though the long-term perspective of the market is not really that important because long-term trajectories are basically pegged to the long-term economic policy, and economic policy usually really affect that. And in the long run, you already know, whether the Fed already raised the interest rate or not. So at that point, it doesn't really matter what the actual long-term trajectory is. Usually, U.S. is a high growth sort of country, anyways. Even though the debts are piling up, it's really a very interesting equation if you think about it. So when you have a lot of debt, right? And when you have a lot of debt in a country, it means you're spending more money in your investments. And if you apply the standard macroeconomic concept, when you're doing a lot of investments, especially you're not getting debt from your own people, right? You usually have debt from other countries, which is which is reflected in the FDI, which is foreign direct investment. Foreign direct investment. What it means is, so every dollar they spend in investment right now, for example, the $3.5 trillion budget or the $1 trillion infrastructure bill, we're expect to see at least a 1.5x return in about 6 years. I mean, right now we're not really talking about the effectiveness of the U.S. government, which I think right now is at the all-time low, right? I think a lot of government workers are getting paid too much for the work they've been doing, and I think it's really inefficient. If you go to any DMV, if you go to any of the governmental agency, the sort of like the efficiency of they do their work, how they conduct their work is not on parallel to how they're getting paid. And the thing is, right now we have a labor shortage. The labor shortage is actually humanly induced. It's not really something that it's actually natural. The reason for that is because you have a stacked up stimulus package. You have employment benefit that is way too high, and people are not incentivized to actually find a job. But when taper actually happens, then that's going to be a problem. But when taper happens, that means a lot of people is not going to have enough cash to support their daily beings. And it's just a vicious cycle. If taper happens in a wrong time, then we're actually going to see about a similar effect of the 2008 financial crisis, but this time it's more about people being lazy and people not getting work and all blah 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 blah. But anyways, this is gonna be if you want to hear about me talking about potential taper and potential a actual market, not correction, but a market shock or market crash, then it's gonna be a separate video. But I think right now it's too early to decide, and I think right now it's way too early to short the market because Fed might actually not taper on November, right? Because next month, if we keep seeing this fear index to go over 28, it's pretty bad. Okay, so going back to fear index, if the fear index is lower than 27 or 28, that means the market in a short-term period of time is extremely fearful that the market is going to drop down, which means we can play by that. If you guys know me, I do think the SPY has a longer runway. than people expected, because if the tech bubble actually popped, then you will see Google's value drop by 20% and Tesla's value probably drop by 50% if you're actually looking at fundamentals, which is pretty bad right now, right? We don't want that to happen. So when you have a fear index that's over, that's lower than 28, or in here previously it's at around 34, that means it's probably a good buying point. And we have to look at VIX too, right? Let's have a very interesting talk on the VIX. Okay, everybody knows that we bought in VIX puts last week at the highest point, and we sold it around here, or actually we sold it around here. We didn't really maximize our profit, and today, bam, VIX just shoot up by about 30%. We think it's time to buy some puts. That's what we did, right? This is why on Patreon we actually talk about it. We talked to we told our Patreon members. I think I just uploaded a video right now that we bought some VIX puts. We don't think a 30% increase on a VIX is gonna stabilize. Okay, we think the fair price is right around $20 or 19.14. So it's probably the market's gonna rebound tomorrow and it's gonna die down a little bit. If market spikes up again, then we bought twice as much VIX puts as today. Okay, this is the strategy we're gonna impose. And I do think the market is overreacting to a lot of the things that are not really warranted. So I think the earliest is by the end of today's market close, we will see a SPY on a little bit a recovery that's that it's not gonna close at 2%, and because the highest today is dropped down to 2.18%, which is ridiculous on SPY. I think it's gonna rebound a little bit, and I think let's do it out in here, right? In the next one, wait, let's see, 1 2 3 4 5 6 7 8 9 10 11 12 14 15 16 17, all the way until October 22nd. We're gonna see a pretty volatile market. And if a lot of those pre-assuming market conditions haven't been solved, for example, right, the Evergrande crisis that people have been talking about, we're gonna post a very detailed video on that. We have a very different perspective on other people, because I actually, I've studied on 3 continents. I actually know the Chinese culture, and as you guys know, I'm a mixed, my ethnicity is mixed. So, part of my parents is actually Chinese, and I speak Chinese. I not only speak Chinese, I speak other Asian languages. So I actually understand the culture. I understand what the government really want to do, and I understand what really is going to happen in the next few months in terms for Evergrande. So that if that haven't been settled down, or people have a clear indication of where things are going to go, then we're going to see a huge spikes in SPY, bam, 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 right? But that doesn't matter. Because eventually the SPY, if you guys look at this, right, SPY is still at a upward trend right now, which is interesting. If you just lay down all of the lowest point here, you will see the SPY, the stabilization point is right at my line here, which is 435. It's most likely to stabilize, because if you think about it, US market is the most liquid market in the world. If we actually see a market shock, right, as I talked about on my Patreon video, we actually have a very interesting detailed price target on Patreon for SPY. If the price lower to this, what does it mean? If the price go up to this, what does it mean, right? That's the whole point of the Patreon content. And what's gonna happen if we actually see a market crash and the entire world's gonna crash? Then what are we gonna do? Short-term wise, we're gonna bet on a rebound, because Google's revenue is not going anywhere. It's increasing. We're seeing more and more people actually buying Tesla cars. The Tesla delivery is going to be better. And what else do we know about the market? The gold price is not really going to go anywhere, because people are speculating that the Fed is going to increase their rate earlier than ever. But if you guys are going to bet on the Fed is not going to increase their interest rate or not going to taper on November, then what's going to be super interesting is, hey, we can start loading up on gold and commodity, because inflation is not really going anywhere. I don't think the inflation is actually transitory. I think the higher inflation is going to stay all the way until about December. And some of my friends are even saying that Because how we drive that inflation is not going to go anywhere is we look at oil price, we look at the rate of change, the percent change of oil price in terms of like the days of the days of the month, the daily percent change, and we look at the actual commercial and civilian gas price for oil in the gas station, and we look at the average shipping cost per container. It's not looking so great. So inflation is it's not gonna go anywhere. And as we know, if inflation keeps rising, then the stock market is actually gonna follow, right? You will see a temporary bond yield increase, and the market is gonna shock. And then after the market shock, we're gonna see a rebound, and it's gonna rinse and repeat because inflation is not really going anywhere. And if eventually we're gonna see a $120 per barrel oil, then the SPY will probably gonna sit at 460. Okay. And right after oil, get off of its pendulum or get off of its pedestal, then you will see a market to have an actual 20% shock. Okay. Right now, don't be too worried about it. Right now, it's a short-term correction or short-term shock. So I'm gonna post this YouTube video now. Hopefully, it's a chill pill for you guys, and maybe it's time to buy that dip. But again, we're not financial advisors. We do not give financial advices. Everything we say on this channel is for shits and giggle. See you guys there on the upside. No, we're not joking. See you guys literally on the upside tomorrow.